Good morning, ladies and gentlemen. This is Brad Matheny. Today is the 26th of February, Sunday, and after nearly 3 weeks of working on the new TT-3MACD TradingView script, I'm here to announce that I believe it is ready. I'm going to show it off in this video, show you how to use it. I've built some adaptive technology into it. It looks actually kind of impressive. Doesn't work on everything. I'll give you the forewarning right now that it is not an end-all, be-all trading strategy that works on everything. You will be able to adjust it and use it. This is version 1 that I will be releasing. We will continue to, I will continue to expand on it. The purpose of it is to help the day traders that are out there using TradingView and following my research to be able to identify and spot good trading opportunities in the SPY and other markets. So this is going to be a new adventure for all of us. We're going to be doing a lot of future improvement, and that's the purpose of what I do. So I want to remind you to visit MENT.com. This is my website. And like I like to say, I do the research, you make all the trading decisions. My job is to continue to do what I do best, which is research and create advanced solutions for traders to be able to profit from the market. All I ask of you, very simply, is if you find my research helpful and you decide that I am worth the effort, meaning the research that I provide, the context that I provide, the custom indexes, the SPY cycle patterns, and now this new TradingView script, then please come to my website and subscribe to my Expert Growth membership subscriptions. They're very inexpensive. You can see here the cost is very cheap, $54, $55 a month, which is discounted 26% from the regular rate for a monthly subscription, or $4.99 a year for an annual subscription. Between everything that I provide to you, including the incredible MENT rotational modeling system, which is right here, you can see it's performed extremely well over the past 23 plus years. We just had a brand new trigger. My focus has been on longer term swing trade analysis, but now, as I stated, I'm moving into more intraday trading solutions for members. This is the Expert Growth membership page. It comes with everything here. You have access to all of my research here for $55 a month, and my goal is to help you become a better trader, learning to find the best trading setups. The cycle patterns have really impressed a lot of people. These are predictive modeling solutions that go out into the future. So we're looking next week on tomorrow is a major crush pattern, followed by a blank day, followed by a gap potential, gap reversal, and then a breakdown day. So we have some actual downward potential trending here setting up over the next couple of days. You can see here another crush pattern, flat down, a momentum rally, and then a gap up higher. So it looks like in March 8th or 9th we might actually get a bottom. Now I am going to show you very briefly here. Okay, I'm going to have to shrink this down to get to it. 1 second while I move this up. And I am going to show you here the new cycle patterns. This is the new cycle pattern setup. The SPY cycle patterns, everything from this side is all the same in this white area. I have developed a new biasing system which gets updated every day with current price activity. So from this point forward, we do not know what's going to happen on Monday. The current daily biasing system is bearish. The current weekly biasing system is bullish. These are designed to help you understand what's taking place in the market. Now, these are a little bit predictive in the sense that we had a change in bias on, I believe, January 13th, I believe, in the daily bias moving downward. So we have been essentially in a topping downward biasing scenario in the SPY on a daily basis for about the last month or so, which is why we've entered into this flagging formation and we have trended a bit downward. The weekly bias is still bullish, meaning that we are in an upward trend. These will give you ideas of what to expect longer term. So weekly bias means we're in an uptrend still. Daily bias means we're in a downtrend, and that means that throughout this time frame, using these cycle patterns and using my analysis, you can see that the flagging formation and the rotation that's taken place over the last 15-20 bars has really been a result of this flagging downward. This is a biasing downward mechanism. We're consolidating in an upward trend. Now, if we get a bias on a weekly basis that changes into negative, that means that we're going to be moving and looking for downward price activity to continue on a broader scale. If this daily bias eventually flips to bullish, then we're going to be looking at these cycle patterns as predominantly bullish cycle trends. This is the longer term trend here, which is basically based on moving averages, Donchian and price activity. This is the type of price action that we see, and this is calculated based on the price activity right over here. So until I build the predictive pricing modeling, we will not be able to predict much of this out into the future. Where we're at with this, again, ladies and gentlemen, is we are adding more context to the SPY cycle patterns as we expand this. Now, let me come back over here. And again, reminder, come to MENT.com, help me out. If you like what I do and you like my research, remember, support me, support my research, support what I'm trying to do by subscribing to my Expert Growth membership. It's really that simple. Okay, let's go over here to the SPY, and I believe this is it. Yep. Okay, so this is the TT-3MACDStrategy. You have a lot of information here. Let me close this and show you the basics of how I expect you to use it. This is a SPY 5-minute chart. This is the raw price data in candlestick form. This is, again, a secondary SPY candlestick chart. I am using the 2 right up here, the 2 chart layout. The reason I am doing this is very clear. I'll explain it to you in a minute. I've set this page up so that you can see exactly how to use it. These are lines that don't need to be here. And what we have is a sell signal is labeled as MACDSE. Buy signals are labeled as MACDLE. LE stands for long entry. SE stands for short entry. SX or LX stands for long exit or short exit. And then, of course, you can see we have a stop system now in place as well. The purpose behind this is to help you find better trades. So, for example, here on the 23rd, we'll take a look. The 23rd on the SPY cycle patterns was a base rally day. Okay? We come back over here, and we know that in this time frame, from the 23rd, which is basically right here, oops, try to get this lined up right, from right here on the 23rd, we were looking for a base rally, 23rd to the 24th. So ideally what that means is we're going to be forming a bottom and trying to find a base rally. Okay, we gapped up, trended downward, rotated down near a bottom here, and then eventually formed a base bottom and started rallying back to the upside. As a trader, how would you have taken advantage of this? Well, what you would do is you would take a look at the activity that's taking place in the system. So you would come here using the linear regression channel. You see we gap up and we move into a sideways channeling formation. So this is a buy trigger that took place right here. It eventually did get stopped out over here. You can see the Donchian channel here was, or the linear regression channel eventually started moving downward. What is the purpose of this linear regression channel? The linear regression channel is designed to teach you and show you channeling in price. We do not want to be taking long trades when the channeling is downward cycling. We do not want to be taking short trades when the channeling is trending upward. Okay? We want to try to stay away from sideways large volatility trending like we're seeing right over here. This is large volatility sideways channeling. This is a very difficult market to trade. You can still trade it, but ideally we want to try to trade this in very short targets. When we're getting narrower linear regression channels, this is a much stronger trending market. This is a great market to trade. This is a very difficult market to trade. So what we're looking at here again is, had we gotten into the short trade or the long trade at the very early morning, we would have learned very quickly. You can see that we're well above target levels. You can see that we would have gotten into this sideways channeling here, downward sloping. This would have gotten us out of potentially any risk. We would have tried to cut our positions. As long as this is moving downward in a downward sloping manner, we are not seeing forward carry through, upward carry through in the market. Even though the Donchian channels here were green, you can see that this big gap spiked everything up, and then we immediately rolled down into a downward cycling channel here on this 3D wave. This is the basic setup. The setup is the MACD 3-cycle strategy, 3 MACD strategy, a linear regression channel so that you can see trending taking place within price channels, the 3D wave so you can see price trending and rotating up and or down, and then the Donchian ribbons, which is the final longer term confirmation of trend. In reality, as we look at this day, we had a bullish trend, downward sloping linear regression channels, and a buy trigger on the 3 MACD strategy. This could have been a good trade, except it started to fall apart very early. We would have gotten out of this trade probably right over in this area, using our own discretion, knowing that the linear regression channel is moving downward. Linear regression is not included in this yet, but I still want to show this to you because it's impressive. So now, we're looking for a base rally. We now get a sell trigger right over here. We're in downward sloping right here. We get a sell trigger right here. We get weakening Donchian. That's what this green area is showing. Essentially, we're losing the bullish trigger. This is a great sell trigger. The sell trigger, let me spread this out. Move this back over here. Spread this out. Move this back over here. Oops. So you can kind of see it, trying to line it up. 23rd, 24th. Okay, fairly well lined up. So here's the 23rd up here, here's the 23rd down here. So you can see here we get in this downward sloping, we get weakening Donchian, we get a downward sloping 3D wave, we get a good sell signal on the MACD signal. This gives us a great opportunity here. We come down for target 1, come down for target 2, our stop level moves down, we get good solid basing, we roll into a long trigger here. This is the momentum base, or the base rally setting up based on my SPY cycle patterns. Now we roll into an early stage buy trigger here. Why is it early stage? Because the Donchian channels haven't turned green yet, and the wave cycles haven't turned green back over here. They do right here. So I'm going to try to draw a vertical line so you can see where the system pretty much confirms right there. That is a, yes, that is confirmed. That is good. Okay, so we get an early stage buy trigger here. We have upward sloping linear regression channels. We have early stage momentum bullish triggers here on the 3 MACD wave. And we are getting weakening right here, Donchian channels. This means the bearish trend is weakening, waiting for this to move. Once this goes into green, then we have longer term momentum to the upside. And you can see this shows we have longer term momentum to the upside as well. We get nice tight Donchian, target levels right over here. We're moved above our target levels and we are rallying upward throughout the end of the day. So you catch a nice move in each of these instances as this trend sets up. So we get our sell signal here, coming down here. That's a 0.73 roughly opportunity to the downside. You get a buy trigger here. And we have our buy trigger at the opening right here, all the way up to potentially this area is a $0.783 target on this side, on the SPY, 0.75%, and about a $2.50 downside swing. The idea here, folks, is that you can use this and learn to become better traders by understanding how to use these cycles. Now, when we gap down over here, this is a day that is very difficult to trade. So let me move this over here, 24th. We still get some targets. Okay, these are adaptive targeting levels, so we're getting in and hitting our targets. So you might want to look at these from a standpoint of saying, hey, you know, if I get into a trade and I get my targets, I want out. Okay, I'm going to, especially if the range is tighter here, you definitely want to be cautious when the range of the linear regression widens versus tightening. Tightening, upward sloping or downward sloping linear regression channels are showing you that you are trending in a defined trend mode. Wide linear regression channels in a sideways flat mode without any real alteration tells us that we are in a sideways channeling market. So you have to be much more aggressive at taking your targets. Grab your little 23 cent to 50 cent type targets and deal with it. That's just the way that it is, okay? So let's take a look at this from a standpoint of longer term, and what I want you to see is the 22nd, lining it up there. So again, get rid of this box, and let's take a look at the strategy. So the actual strategy itself is quite impressive. This is a real historical backtest of the SPY, not Heikin-Ashi. This is actual candlesticks, intraday, 5-minute, going back 2,000 plus trades. So you can see here the performance is net profit 224 points. Average trade consistency and or accuracy is 47%. Remember, it's very difficult to build a system that's got 100% accuracy or even 80 or even 60% accuracy. It's all about managing your money when you are trading. But I want you to understand that this is a historical backtest going back, let's see here, let's scroll all the way down to the beginning of the trades, going all the way back to February 2022. So it's a little over a year of data. And this is on a 5-minute basis, over 2,000 trades. So now remember, with 2,000 trades, folks, if we were going to see some sort of a fault in the system, we would see it fairly clearly. It is trading 3. So what ends up happening is we get in on 3 contracts on entry, and we get out at the different targets and the stop level. So it's basically enter on 3, 1 on target 1, 1 on target 2, and then 1 as a trailing stop level or a runner, allowing us to try to capture the best profits that we can. Now, this will work on various markets and won't work on various markets. So when we take a look at the overview, you can see the percent profitability is 47.71, 2,500 actual trades, a 1.135 profit factor, max drawdown of $91, and this is again only trading 3. An average trade profit is 9 cents. But understand, it's designed to help you find and trade the best opportunities. How you trade what you trade is up to you. If you're trading options or you're trading futures contracts, this will give you a pretty good opportunity to try to trade more effectively. But what I found was interesting is, again, it doesn't work on every time frame. So go to 10 minutes, which is going to be much broader. You can see the accuracy went up. 221 minutes, profit factors stayed about the same. Come over to hourly. Lost money, minus $146, 48% accurate. Now we can play with this. There are a number of setup factors in here. So using the MA filter or using the Donchian filter might actually help improve this. It does. So you can see now we've gone to $337 profit with 48% accuracy. These are filters that I have included. Now let me show you what's going on with these filters and the setups. So the setup's fairly simple. You have Fibonacci target factoring. So 1.328 is your minimum target factoring for target number 1. 1.618 is minimum target factoring for the upper range for target 1, and those are the boxes. You have target factoring for number 2, min, and target factoring for number 3, max. You also have the MACD values right here, okay? Then you have what are called left bars and right bars, which is looking for these pivots. You see these little plus and minus or plus signals here, blue and red? These are to show you pivot high, pivot lows. Remember, in an uptrend, you will see higher sloping pivots. Let me move this. So in an uptrend, you're going to see a higher pivot low moving higher across these lows. Eventually, it's going to break down. In the same thing, you'll see higher pivot highs taking place in an uptrend. In a downtrend, you'll see lower pivot highs coming down, and you will see lower pivot lows coming down. So this is a visual marker to show you where these pivot high and lows are taking place in an uptrend or a downtrend. Okay, so now we're going to come back over here and we're going to go through some of these filters. A Donchian level is a measurement of the highest high or lowest low over the last X many bars. The purpose of this is to establish price volatility or price ranging. The Donchian channels became somewhat famous as they were disclosed in the Turtle trading system many years ago, which is basically a 21-period Donchian moving average on a daily or weekly chart. And when the weekly chart is breaking to new highs and the daily chart is breaking to new highs, then you would trade the long side of a stock over the longer term. So you have the ability here to turn off stops. If you turn off stops, it becomes a true net reversal system, okay? It will then basically just trade in a net reversal mode, okay? There are no stops. There are no stops being drawn. It just goes long, stays long until it goes short, stays short until it goes long, and so forth and so on. It becomes a net reversal strategy. Using adaptive stops allows us to have a more aggressive stop system. So if I turn the stops back on, you see we're at $337 profit with 48.96% profit factor. If I turn on turn off the adaptive stops, now we're at $292 profit with a 48% accuracy. What we're doing with the adaptive stops, and L stands for logical, it's a Boolean value, is we are addressing stop values in a more aggressive manner. When I do this, notice this move up as we see here. If I turn on the adaptive stops, you'll notice that the stops should become more aggressive at times. That's what adaptive stop technology is all about. The Donchian length is a ranging mechanism that we use to determine actual price range. So now we're on a 1-hour chart. Let's go back to a 5-minute. And we have $84 in profit on this 5-minute chart. I'm going to come back into the settings, and remember I had turned the filters off. I'll show you what these filters are later to get to the 224. But now if you change the Donchian to say 5, that means we're going to be reacting to shorter term trends. So when I change the Donchian level to 5, we are now trying to get this to react to shorter term price volatility. And that's what that Donchian level is used for, measuring price volatility over a range of bars. It still performs quite well. 53% accuracy, $250 over, again, 1 full year of trading. You see it's taken a lot more trades because we're down on a 5-minute chart, but that's what the Donchian range is. If I set it to, say, 50, what's going to happen now is we're going to be measuring Donchian range inadvertently to price. So a 50 period 5-minute Donchian is essentially, what, about 3 hours, if I do the math right, 2.7 hours roughly. So what happens is we're measuring volatility now in an inappropriate manner. So you want to find a value that works. Its default is 15. This is a good measurement of time. So somewhere theoretically between 5 and 15 would probably be sufficient. Using the MA filter means that we are going to be trading only in the direction of moving average. So if I were to set this to the default, which is 15, and turn on the moving average filter, this means that we are trading only in the direction of the moving average. So if you wanted a 40-period moving average, you could do so. And it would perform based on taking trades only in the direction of the moving average. Okay? That's how this is designed to work. So put it back to its default of 15. Donchian filter is kind of like an Ichimoku chart where you have a cloud. So how can I draw a cloud? So understand, a Donchian filter of, say, 25 offset by 25 would create a window where price must trade outside of that window in order to execute. So let me explain how this works. If I were to have a Donchian channel running 25 bars in advance of what's actually happening here, we have a Donchian high level theoretically coming down, but we would offset that out 25 days in advance. So it may be something like this out in advance, and the Donchian lows out in advance may be something like this, coming downward. So in theory, what happens is we are attempting to only take trades when we are outside of that channel. Okay, that's the purpose of having this Donchian cloud feature, is to be able to say we only want to take trades when we're outside of that filter length. So the filter is potentially designed to help eliminate some trades in this area when we get into very wide channeling. What will happen is we'll have to attempt to stay out, only taking trades that are outside of a congested range. Okay, use adaptive targets. Adaptive targets are, the adaptive technology in here is all based around the factoring and the Donchian features. So there's an internal mechanism that tries to adapt the code. And when we turn off adaptive targets, they become hard set targets. You can see the numbers change and the boxes change. They become wider and outside of price activity. When we use adaptive targets, what happens is the boxes themselves, the target levels, attempt to adjust to price volatility, making them more reactive. And that gives us the ability to grab more profits and become, hopefully, a more opportunistic trader. Use target 1, use target 2. So obviously, if we turn off use target 1, what's going to happen is it's going to not trade on targets, and it's going to basically not, even though it's still in here, I'll have to take a look at this, make sure the logic is correct. So these will basically allow you to turn off target 1 and target 2. And again, the idea is that this is going to be able to help you perform at a higher level. So now let's just take a look. Let's stick with the 5-minute and let's take a look at some things. Let's go, I don't know, let's go to the QQQ just for the hell of it. QQQ, 45% accuracy over a year. It's had some ups and downs. Max drawdowns 167. Average bars in trade 11. So it's performing okay. Not fantastic, but it's performing okay. Let's try gold. Gold on a 5-minute basis. Took a little heat early on. Max drawdown $15,000. It is 45% accurate and made $26,000 over 2,000 trades. Okay, so it is holding its own. Let's try going to a 15-minute, see if it's any better. Nope, not really. Let's try a daily. Made $44,000 on a daily. Max drawdown 160,000, so ugh. But gold is one of those kind of a make or break type of scenario. Let's try Tesla. On a 5-minute basis, Tesla made $538 over a 46% accuracy. Max drawdown is about $55 or $155. Let's try Nvidia. Huge gap. Didn't make a lot of money. Gapping stocks like this are going to present some real issues because we're going to have some big drawdowns on gaps like this. Let's try Microsoft. More gaps. Still made some money. $89. Let's try... let's go to daily. Find something that works off of a daily. I like to trade more on a swing trade basis. So you see we've got a lot of volatility over here, particularly in this last little move. So we'd have to work with this. Let's try Tesla. 373% profit. I don't know why it's not showing us dollar. Oh, there it is. $373 profit. You can see it's kind of mixed throughout this trading. But again, you know, it is what it is. It's designed to help you. It doesn't work on everything. You may find that there's some really great opportunities on, you know, 1 hour or 2 hour or whatever. You can see here Tesla made $591 over 2,000 trades in Tesla with an average. Let me get rid of that. Try to get rid of this. There we go. 49% accurate. Still not bad. Microsoft. Let me come in here. So let's, yeah, I didn't make any money on Microsoft. Let's try QLD. $94 profit, almost 50% accuracy. This is on an hourly basis. Let's go to 5-minute. Made $220 profit, so QLD is probably better on an hourly. Let's try QID. Made $3,000 profit. Wow. 52% accuracy. And again, this is on an hourly basis. So, again, not to waste your time here, I'm trying to show you how this works and to show you that this is real value for you. If you can learn to become a better trader, learn to trade more effectively in the markets using these structures. So come down here, set this to QID, and set this to hourly, like we've got. The whole idea is you are going to be using this strategy in combination with these setups. So let me make sure we have this lined up fairly well. Yeah, it's pointing. I want it to point to the same area, top and bottom. close enough. So here we have a sell signal, QID. This was back January 6th, 2023. Beautiful, nice little sell signal, downward sloping linear regression channel, downward sloping 3D wave, and we got the Donchians moving into a very strong downward trend. This is a very good multiple day swing trade on an hourly system. We get a long trigger right over here. We've got upward sloping channels. We've got upward trending here. It reaches all of our targets, moves our stop effectively, and we end up getting the Donchians lining up perfectly as well. We come back over here with a breakdown. We get out of a trade. We stay flat for a while. We get a new linear regression downward sloping channel, a bit wider. Means volatility is kicking in. We get downward trending here. We have neutral trending. And then eventually right here, we get into a sell signal. We have decent downward sloping, decent downward sloping, decent downward sloping, waiting for the Donchians to kick in, which they do the next bar. We move all the way down, grab our targets back over here. We get a pop the next day, which looks like it gets us out into a long trigger, which is negated by this downward trending, downward sloping. We would ignore this trigger theoretically. We end up getting into a downward trigger right here, coming into downward, tight downward sloping, perfect, downward trending, perfect, downward Donchian, perfect. We want to ride this to the downside. Now, hypothetically, remember, you could be trading this, looking at these signals, looking at these triggers on an hourly basis, and then move it back down to a daily as well, or excuse me, a 5-minute. So in theory, you could have a 5-minute trending here. Let me change this to actually this to 5-minute. Changing the upper one to 5-minute. Now I'm going to go back to this day, back to the 26th of January. February. Still February. All right, just past it. So here we go. Here's our 26th. So here we get the pop up to the upside on the early morning trading. You can see here on this trading down here. So here's our day, the 26th, on an hourly basis. Let me spread this out. Spread this out. 25th actually, so we're in a downward trend. 24th, 25th, right there. So we get in this downward cycle trend. We're in a downward trending market, we gap up. You can see that we're in bearish trending. We've got a little bit of an upside swing here. You can see we've gapped up here in the linear regression channel. Within the next hour, this is going to be showing us that we have a downward sloping channel. So you can see we got a long trigger on the 5-minute, very quickly got us out with a T1, then got stopped out. Then we end up getting into a short trigger right here, which is very early on in the day. We're in downward trending, downward sloping linear regression channel. This gives you the ability to trade this to the downside all through the day, and this trade continues through the 26th. Also downward sloping. So when we get this little buy trigger right here, where are we on our channel? We're right here. Where do we have? We have downward sloping trending, downward Donchians. So this is an idea here where this trade should be theoretically invalidated, because it does not match the downward sloping channels that we have on the hourly. Now, if I were to put this to, say, a 30-minute and try to come back to that time frame, January 25th, 26th, right in here, look, we still have that downward sloping channel. Downward sloping here, downward sloping here. The Donchians have gone green because of the gap up, but they basically are reflecting this Donchian channel to the upside, but we still get a fairly good confirmation to the downside that we get this gap up, we've rolled downward, we've rolled lower, we have downward trending here, downward trending here, downward trending here. This gives you a very clear opportunity to trade to the downside. Following these linear regression channels is key. Following this 3D wave cycle is key. And then eventually you can see we move a little bit to the upside here, get a little upward channel sloping here, and look at what happened to price. That's going to be probably right over here. Upward gap, we got a long trigger right at the end of the day right here on the 3MACD cycle. We got a nice little gap up to the upside. We get a little pop up to the upside on the 3D wave cycle. This is weakening, so this gives us an opportunity to potentially trade into this move. And you can see we end up getting a net reversal signal here to go flat. Okay, this is actually go short. And then you can see we rotate throughout much of this channel back over here. But again, the idea is for you to use these cycle channels. This is, again, QID on a 30-minute basis. This is QID on a 5-minute basis. We could apply these any way we want. Intraday, 5-minute, 10-minute. Let me get these over to the edge and get this over to the edge. And the idea here, you can see the last couple of days have been, fairly choppy. Lots of gapping as we got through this flag. But it gives you the opportunity to trade within a range. This is a very broad range QID cycle. But we clearly move into bullish trending right here. Upward channel in a broad range means we have to be cautious, start looking for our targets. Upward channel, we want to be trying to go long, not short. Upward channel Donchian, we want to be trying to go long, not short. And this gives you the opportunity to find your long entries and trade them efficiently. Once we get into narrow channeling here, this is great for upward trending, nice and tight. We get into a bit of a broad consolidation, still in a moderate upward trend, getting into a bit of weakness. We start turning into bearish trending and a downward wide cycle. This is going to be fairly risky, but you can still trade it. And again, this is a scenario here where we have tightening downward sloping channels. So this is basically telling us that we would be looking for a moderate downside move in the linear regression channel. It's confirming kind of over here with a downside move, but the Donchian does not agree, indicating because of the gap up. This is a real tough area to trade. This is a real tough area to trade. But remember, this is a 10-minute QID, so it's going to give you those opportunities of when you want to trade, when you don't want to trade. So now let's go back to the SPY and come back here to the SPY. And essentially, ladies and gentlemen, the purpose behind this is to help you stay effectively trading. You can, looks like I drew something here, and get rid of this, and get rid of this. There we go. You can set this up any way you want to be able to trade effectively. I am giving this to you as a tool to help you become better traders, and I will continue to revise this as we go forward. The purpose of this is not to be the end-all be-all trading system, although I am, somewhat impressed with it, particularly if you know when to deploy it efficiently. Remember, the ability to have something that you can throw at just about anything over a year's worth of data, over 2,200 trades, produce some sort of a viable outcome is actually quite impressive. Hypothetically, we go to hourly. And again, mixed a little here with the hourly. Let's go to 2 hour. And again, somewhat mixed, but still producing profit, not having tremendous drawdown, and averaging about 52% profit. If we go down to a 1 minute, I wonder what 1 minute would look like. Lots of trades, $16 profit, didn't look very good. But again, the purpose of this is to help you And like I said, I am trying to at least provide you, let's see, 3-minute real quick. Nope, did not look good on 3-minute, but looks pretty good on 5-minute. The purpose of this is, again, to help you become better traders. Learning to use this as an effective trading tool to help you understand and become better traders overall. I want you to realize that it is a tough job to become a skilled trader, and everybody takes losses. But I'm trying to at least provide you some guidance with regards to being able to catch and trade these trends effectively, so that you can learn to become better traders, learn to make better decisions, and hopefully trade the markets in an efficient manner. Let me make sure I've got myself set up here. The way I recommend it right now is learn on a 5-minute chart and learn on a 5-minute regular candlestick. Actually, the way I propose running this is to run on a Heikin-Ashi chart. Oops, wrong one. Candlesticks. Run the upper chart as Heikin-Ashi. Heikin-Ashi charts provide very clear trend definition, much better than regular candlestick charts. And again, what you can do in this manner is you can take advantage of Heikin-Ashi trends, like I said, when they're generated here, and then try to come down and confirm your entries within these channels. You want to try to get in near the lower quadrant of these channels and be able to trade them effectively. Let me see if I scrunch this up to about here. That gives us a pretty good indication of where we're at. And remember, the Heikin-Ashi backtester is not accurate. Okay, this is telling us it's 49% accurate. We made $1,300, but remember, you cannot get these prices. Heikin-Ashi produces invalid price data, so this is not an accurate result. I wish we could get this data. That's why you have to time your entries using the real price chart here, the real candlestick chart. But again, the way I recommend you run this is run a Heikin-Ashi chart on the top, run a real candlestick chart on the bottom, then use this 3D WaveTrend 3D and this Donchian trend ribbon here as some sort of confirmation, at least as you get started. The goal of this system would be to provide you better trading decisions as you move forward, and I hope you like it. Remember, if you like what I do and I'm helping you, please come to MENT.com, support my research, join my Expert Growth membership, because I'm trying to help you become better traders. All right, guys, thank you.